Thank you, Steve. That was an awesome discussion. So blockchain is not hot for community banks, but it's probably hot for everybody else. So our next panel is actually going to talk about payments and blockchain. And to get the panel kicked off, I'm happy to introduce the moderator, Eric Chan. Eric is an entrepreneur and advises many startups, and he's a great friend of iValley. Eric, welcome, and over to you to get your panel. Thank you. Okay.
All right, good afternoon, everyone. I didn't feel like using the podium. We don't need to be that formal. All right, so I'll just start. Thank you for the introduction. I'll just let the panelists introduce themselves, and we'll just get into the questions.
Testing. So this is thanks. Brian Ma, CEO of LMH Blockchain. We have a booth out front, by the way. One of our core products, SayTech or Say Technologies, which is a voice biometric solution. Very excited about sharing that here at the conference and appreciate the opportunity to be on the panel and to partake in the solutions here in the conversations. Thank you.
Good afternoon, Marianne Francis. I'm the Global Head of Product and Strategy for Treasury Payments and Blockchain at DXC Technologies.
Good to be here. Murli Ratnam, VP of Engineering. I manage the business payments aspects for Western Union and also head enterprise architecture.
And I am Val Bercovici, founder and CEO of PencilDATA. We also have a booth out front, the big green on white booth near the front door. What we do is we don't overthink blockchain. We actually help you extend chain of custody over any existing application or process or data or software you might have. And we help you do that by integrating and accelerating the adoption of your choice of blockchains within the enterprise.
Great. So I'll get started. Since everybody's been talking about blockchain, I wanted to get a temperature read. How many of you are in your company or maybe in your personal edification working on or looking at blockchain in the audience? Okay, so a few of you. Okay, good. Then I'll just start off with the first question to the panelists. Where do you think we are in the hype cycle for blockchain, since it's been talked a lot about today? And hopefully this will get a good temperature read, since you guys are a pretty diverse group of individuals where you're working.
I think we're peaking, but we're already at, high enough that there's no oxygen left, I think, to breathe. We're way too high. We're peaking. What I'm seeing, because we're enterprise blockchain focused more than cryptocurrency, is that there's just a huge, massive confusion in the enterprise marketplace. You have the effect of a new technology, where there's just a lot of knowledge needed to be acquired, combined with a unique effect of an excess of hype and speculation, which is confusing a young market in desperate need of education. So I think we're nearing, hopefully approaching the peak of the hype cycle, and there will be a drop afterwards.
So I would argue that the hype cycle ended in December 2016, January 2017, and I would start, I think we had years of intense, we've got to do this, we don't know why. Nobody knew why, they just had to do it because everybody else was. And I like to say January 17-ish, we got blockchain fatigue. We just still talk about it. We don't know what it is. It's not understood. There's a lot of evangelism that still has to go on. People don't seem to understand that it's a how. It's not a what. And so they just want to do it. They don't know why, and they don't know what they want to do. They just want to do it. And so I would say that we're in a good stage because it has calmed down. It's like, people, calm down. You're not the last one to do it. Everybody thought they were the last ones to do it. They don't understand what it is. So I think we're actually in a good spot because it's calmed down and people are looking at it for what it is, which is a how and a technology, not a what itself.
And I testing. This one. Oh, One of the stories I tell to participants that stop by the booth. So just a couple weeks ago, I was in Beijing at a blockchain conference, and there was over 100,000 participants at this conference. So this went on for 3 days. And we had people pouring through, and this was sponsored by the government. In fact, one of our clients and partners is in the audience, Maggie Lin from All in All Global. And we shared a booth together and did a whole bunch of demos and talked to a lot of people. And there is just a massive push that we see globally in other countries where the governments are investing a lot of money into blockchain to try to position themselves globally as the leader in this technology. And we see this, we see money pouring into startups, we see it pouring into platforms. The governments are trying to get their hand in this as much as they can to set the stage and to try to create an environment where somebody's gonna rise above the other countries. They wanna really be in the lead on this. China is investing heavily in this technology and in startups and in companies that want to do this. South Korea, all around the globe. So it's got a long ways to go before it peaks. And we're at a point where there is a lot of confusion. You know, we look at the online courses where people are going online to learn about this, and they're getting 50 and 60,000 people in one class online to learn about this technology. So there's a lot happening here, and there's still a lot to do in this space.
I would probably agree more with Marianne, right? Like, I think I've been with Western Union for probably a year, a little bit over a year. And I would say when I joined Western Union, there was such a big interest in blockchain, right? Like, and there were like a few evangelizers. And anything that would be said on blockchain would immediately be like turned into gold, and there would be a whole army of people saying like, yeah, we got to do that, right? But it has since turned, we do experiment a lot with the technology, and not only with this, but others as well. But now the questions are more like, what does it actually like enable, right? What's the customer experience like? What problem are you solving for, right? So I think like we're kind of peaking at the hype cycle. Like there's still a lot with respect to the technology itself that still needs to stabilize, I would say. But there is definitely an active interest, and it's probably the right thing at the right time for now.
So I'll kind of segue a couple of things that the panel can comment on. One idea is that you know, blockchain may not be a revolutionary thing, but it's an evolutionary thing to kind of replace existing rails or existing payment systems. The other thing at work and forces at work are moving towards cashless societies, right? India being a big push. China obviously is trying to do the same thing. Other governments are looking at it. Do you guys want to comment on maybe some of those factors that may be pushing the hype of blockchain or maybe downplaying coin?
So yeah, there's something we're seeing that's very, very clear in that there are a lot of, throughout 2018 at least, a lot of enterprise blockchain projects, particularly non-crypto. So just, you know, compliance, extending chain of custody across, you know, broader and broader workflows, both during back office operations, but also, you know, industrial IoT machines and autonomous vehicles and so forth out on the edge, so to speak. We're seeing a lot of people, and you see this in supply chain a lot, try and replace systems of record with blockchain. So classic use case of first generation blockchain project was sort of stalling or failing. Let's put shipping manifest on the blockchain. Let's put the bill of materials on the blockchain. And that just creates a lot of complexity in implementation, a lot of overhead in operations, and lack of agility, which is what everyone's chasing. Second generation solutions coming on the market right now, and those are the ones that we're working with, are realizing, you know what, databases are pretty darn good. You know, they've matured quite a bit over the past few decades. They're fast, they're efficient, they're reliable. Why don't we keep those in place and keep a shipping manifest or a bill of materials in a database or in a spreadsheet and verify the changes? So thinking of blockchain in those use cases more of as a verifiable log than a system of record is yielding huge leaps in agility and adoption of the technology and time to value.
I think the best thing that happened over the evolution of blockchain was it all started as Bitcoin, right? I mean, they happened to pick blockchain to build it on, but Bitcoin was what got the hype. And it got the hype for all the wrong reasons back in, you know, 12 and 13 and 14. But it was created specifically to be P2P, real time. And so everybody assumed that what we were out to accomplish was real-time payments. They didn't even think of blockchain for these other uses. And then as we split off the currency and started talking about the blockchain technology, everybody still thought the top 5 use cases were cross-border, trade, right, mortgage, a whole bunch of stuff that's still floating around out there. I think the best thing that what people don't seem to understand is chaining's been around since the 80s and 90s. The difference in the blockchain world is that now you've added this cryptography to it that makes it secure. And so it's why does that transaction fit on the blockchain? It's because of the immutability, it's because of the trail, it's because of the irreversibility. And it's got a lot of value, but it's not set for every single transaction. It's just gotten so caught up in the world of payments. And if you look at what the rest of the world is doing in payments, if it's not blockchain, because they haven't figured that out quite yet, look at the real-time payments and faster payments and same-day payments and instant payments. And right, it's really what people are after is moving the money faster and then obviously having the data be recorded and tracked and not sit in 15 different locations. So I think as people start to think like that more, that's when it's finally understood as to how it could be used. Slow but sure. And I really want to violently agree with, everybody just thought you could lift and shift. Like, I just want to do what I'm doing today, but I want to do it on the blockchain. And I think that's calmed down as well. People are now, why do I want to use it? How will it benefit? This problem might be fine on a different technology, and the blockchain takes it to a different level because of the type of transaction that it is.
And we're seeing a lot of innovations, stem out of this technology and kind of the future generation of the innovations. So, for example, many of you may have seen just last month in September, Wall Street Journal, Forbes are talking about a process that Walmart is putting in place to manage their food supply chain, using blockchain technology as the underpinning, and really leveraging the fact that if, in this case, lettuce is being grown someplace on Earth, that in fact they can track it from the point that it's being grown to the point that it's being shipped and handed out to one of their locations to sell and ending up in the hands of a consumer. Now, if we think about that, doesn't that make a lot of sense if you're concerned about the quality of food that you're eating? That you have a way of really knowing that what you're buying is truly been served up from the location where somebody actually picked it out of a field and used the right ingredients, fertilizer and so forth, to help grow it. All this can be tracked. And furthermore, where we get a lot of knockoffs in the system, whether it be food or clothing or any kind of manufactured item, being able to track that through from the very beginning all the way to the point at which you buy it adds a lot of value to the chain of making a purchase, because you know that the money that you're spending is being spent on something you believe that you're actually exchanging that value for. So we see this as a great use of blockchain, building on the underpinnings of payments in the beginning, and then finding these innovations.
Absolutely right. I think your question was more around like the digitization aspect as well, Eric, and I would say like that is both an opportunity and like again for Western Union we have a big retail presence, and again while we don't see like fiat going anytime soon, and it's still a pretty big part of like the economy in like many parts of the world, right? Including here, right? So we continue to actually like monitor this space, right? Like, and we experiment with a lot of these technologies, including the crypto aspects, right? And how we can actually like be part of the growing aspects, right? As and when regulation actually catches up to these things, and obviously a lot of the regulations are there to protect the consumer, right? And we do want to make sure, given at least our history, right, to just be very much in compliance with the regulations, be very customer focused in offering like the right product, not only the speed, right, like as well as like making sure that the product is something that protects the customer.
And if I could just, who in here thinks that the blockchain should be regulated? Okay, so do you regulate your mainframe or Java or XML? Because that's what it is. what you regulate is what you do on it. It's the payment that you do, or the transaction that you do, or that's what should be regulated. That's what should be overseen, not the actual platform. And so that's part of constantly hear about SEC and the regulators and the Fed's more on the crypto side. They're not talking about whether or not you use a blockchain. And so I just think it's gotten so overwhelmed with the bad press and the hype and the Bitcoin stuff that we really have to understand we don't regulate technology per se. We don't regulate the internet. We regulate what's done on it. And I think if we can get to that more clarity, that'll help a lot as well.
Well, I would maybe make a slight nuance. I think there's also this thing where we want to have maybe a universal standard, so we're all either communicating the right way or we're all sending things in a certain format so that it can be more universal. But I agree, there's a difference between sort of a standardization, so we're all doing the same thing the same way, versus the regulatory component.
Well, what you said is interoperability.
Yeah.
that's what you need, is that, the
VHS versus
interoperability.
Betamax, right? So, yeah.
Okay, so I'll move on, try to move on away from blockchain, but if it comes up in the Q&A, happy to take questions from the audience. I was going to talk about each one of you as it relates to kind of payment innovation. What's keeping you up at night, or what are you fascinated by, whether it be faster payment, instant payment, or cashless? What kind of comes up when you think about payments?
This one is it's pretty near and dear to my heart. So I was at Visa for 18 years, MasterCard for 2.5, a number of startups, all in this payment space over the course of a couple of decades. So we've seen the whole gamut, right? From the point at which you're thinking of the transaction and how simple you want that to be for a customer, thinking through, the usability, the reliability, and the security of that transaction, knowing that if your end customer believes that what they're spending and what they're buying is going to be secure, it actually improves the likelihood they're going to make a purchase. And we see this time and time again, that the more confidence they have in the payment system, the more they're going to use it. And so that's what really brought us to our technology, thinking about biometrics. How do we create an environment that's safe, that people feel secure and want to take advantage of, especially in payments? So it all comes down to me for the security of the system, making sure that the data is secure and that the simplicity is there, so there's no friction in the process. It's quick, it's simple, frictionless, and secure.
I guess I've answered this question before, and I keep coming back to, I'm fascinated with the fact that we talk about payments to the degree that we do. And that we involve the consumer and the corporate in that discussion, because at the end of the day, the consumer or the corporate just wants to buy something. They don't really think, well, we've made them think about what type of payment to use for what type of transaction. And is it secure? Nobody wakes up in the morning and says, I really want to use my MasterCard today, right? They want to go do something at which they then pull the MasterCard out. But now we've made them think, there's only 4 rails still, right? There's wire, check, ACH, and card. That's it. Maybe RTP if you give them another year. There's only been 4 rails for 50 years. Just we've put all this lipstick on a pig on top of it, right? They just want security. They want to know. Most consumers don't know that transaction takes 3 days to settle behind the scenes. Corporates will know. The merchants will know, but not most consumers. Everything's a real-time experience for the consumers because they walk, unless it's a car. Can't buy a car on a Sunday, right? But I think it's interesting that we have all of this supposed ubiquity, but at the same time, we make everybody focus on so many aspects of payments consciously, when at the end, that's really just the end of the transaction. It's the settlement piece of what they actually want to do.
I think at Western Union, what I think about is more on the emerging fintech space, right? Like in terms of the innovation, right? Like Western Union is a 160-year-old firm, but it has constantly reinvigorated itself, right? And we are looking to actually figure out these emerging technologies and how it can actually enable us to actually be in touch with and be leapfrog and partner with those aspects. And the new consumer world is such that something that catches fire instantaneously and all across, right? So it is being in touch with the customer and knowing what they want and being ready for that change is what keeps me up at night, right? Making sure that our systems, our capabilities, our mindset and culture and thinking is very finely tuned to actually like be in constant touch with the customer needs, right? And we are building our systems very close to that, right? And be able to react, if not be proactive, be at least instantaneously reactive to the change.
And one thing about his space that's interesting is you had a company come along, Zoom, which was very fascinating in that space, and they opened up cross-border transfers at a very low rate and a very simple app. I really enjoyed using that product and something to keep your eyes on.
You should check out like Western Union's mobile app, right? Like it has the highest rating and probably beats Zoom, but yeah.
So yeah, in our case, we actually think of payments as a sandwich, right? Not an atomic thing. There's a whole bunch of business processes that are involved in actually, presenting the customer with something to pay for, and then a whole bunch of things to track in terms of afterwards, after they paid for something. And that's our opportunity. We see that, particularly when it comes to blockchain, people excessively focus on the middle part, which at best is 20% of the work required, before and after. So again, it's back to the chain of custody, maybe from click to quote. It's back towards actually making sure that what was, purchased is exactly what was quoted. Tracking the entitlements afterwards, tracking the product and service requirements and the warranty. There's just a massive opportunity in the enterprise to apply blockchain to those problems, reduce costs, as the prior fireside chat panelists were saying, free up costs for more customer-facing digital transformation initiatives, and that's our mission at PencilDATA.
Okay, so the last question before opening up to the audience. What do you guys think about the regulatory environment, right? We just went through this huge round with GDPR. We're probably going to see another round either coming from, an Eastern, meaning an Asian country, or maybe the US figures it out. Shaking your head. What are your thoughts on this new regulatory regime?
Maybe I'll go first, right? Western Union, we've had our run-ins with compliance and so on, and like we've since in the last few years totally taken it to heart, right? Like, and to the spirit of various things, right? So our investment in compliance is at probably an all-time high over the last few years, and will probably continue to stay that way, right? Like over 40% of at least my department's budget is on like compliance and compliance program and regulatory aspects, and it shows no sign of like slowing down. Even as we were finishing up our 2019 budget planning, right? There's still a lot of aspects, right? Especially with data nationalization and so on, being able to actually like rejigger some of like our older legacy systems to truly actually be compliant with those aspects requires a lot of work, right? And those are necessary to stay in a very global and a very competitive marketplace, right?
Yeah, so there's a pro, and I'm a legacy banker, so spent a lot of my life with regulators, and I think the pro side is that to the point of being a trusted payment system, right? Customers still look at the bank, no matter what else is going on out there, as their trusted advisor, and they assume their payment's gonna go when it's supposed to go. And I've said before, if your Starbucks card doesn't work, you'll be fine, you'll pull out another card. But if the payment system goes down, we're all in big trouble. And so, that becomes the pro side of you kind of want those regulators making sure everybody's doing the right thing and playing by the right rules and the data is safe and stuff. But, the con side with regulators is that everything's after the fact. Something has to go wrong before the regulators step in and correct it, and they're not necessarily knowledgeable in the space. So we end up with onerous regulations and onerous implementations because we don't necessarily have folks that are experts in the space, and they really don't step in until something's gone awry. How do you proactively regulate in some ways? They've certainly attempted it, and it just is increasingly, more regulations and more compliance, so.
So yeah, I was shaking my head, and so here's the reason why. I mean, if you ask, 5 different U.S. regulatory bodies their either current position or opinion on blockchain, you'll get 5 wildly different formal positions and answers. And that's untenable. And clearly what's happened is it's a good news, bad news scenario. Like over the past century or so, the US has been like the #1 most trusted market, most transparent market. And so it's drawn a lot of capital in, and people, trust the markets here. But that's created a legacy now that has a lobbying power that's resisting this change and the power of trust and decentralization of authority. And I think that's the risk here, is like anything else where you have a very strong incumbent industry with lots of lobbying power. They are resisting the change that maybe other countries are welcoming. We mentioned China, and there's many others. Switzerland, for example, right? So not to mention Korea and South Korea. And that's the global risk I see here, is that the prior success of the US financial system is the biggest incumbent towards future success of the US financial system.
I would say on GDPR, I worked on this for about a year, had to go through like yearly PCI audits many times in my career and managed through these with large teams. And it's a fascinating thing when you look at our social media companies and our financial system for people that have had their data stolen, right? So what is that like for the average person, somebody whose information ends up in the hands of a fraudster? Well, they can recreate your identity. They can order credit cards in your name. They can wreak all kinds of havoc in your life. And if you've ever had to go through and recover from something like that, it's a horrible experience, actually. And we see this over time and time again. So GDPR was born out of that. Lots of complaints from people having to deal with these breaches. And in fact, that's one of the reasons why our company is successful, because we're right in that space. We're trying to help solve this problem. But at the same time, we have to know that none of this is easy to do. To go in and secure this data and do a good job at it takes a lot of money, it takes a lot of focus, and it's something that we need to get better at. We actually have to get much better at managing this data and making sure that the customer's data is secure.
One example of that is you can't actually get a replacement social security number in the United States. Like, you're pretty much born with it, and so if someone steals it, that's it, right?
That's a very good point.
I mean, that's an example where the system's broken, but identity theft is happening on a daily basis, right? Social media is a little easier. You can create a new profile, et cetera, but sort of these legacy systems is a little tough.
And I think that the unfortunate stance for all these data breach situations is that you can't think of it as a hypothetical or a future tense discussion. It's happened to 80, 90% of us already as individuals and as businesses. So it's about time to recognize that fact and have sort of a mature discussion about, now that it's happened, what do we do? How do we react? How do we detect it from happening again? It's not about trying to prevent it in case it happens. It's done. It's happened. My information is on the dark web. We have to deal with that.
And I would agree with Brian, right? I think like all that investment with GDPR, if it is actually applied with the right focus and the right spirit, like our compliance programs, right? Like not a day goes by when we don't hear back from our customers on how we protected like some 60-year-old from incorrectly like transmitting money, right, to some unknown folks, right? All those interjections that we do, right, like with our compliance programs and all the regulatory efforts, really pays off in like true dividends back to the customer, as well as the trust with the business, right? So, yeah, absolutely.
All right, do we have any questions from the audience? Okay, well, we'll take one in front then.
So just a quick question. So from a value perspective, right? So let's say from payments and in a blockchain standpoint, banks today, they don't make money in pretty much anything that transfers is happening. Right? So let's say how do you think we propose to implement in any specific use case about implementing some solution for a bank and make it useful for everyone?
So we have customers in the mortgage processing space, and there's KYC requirements there. There's again a lot of sandwich level document and information authenticity requirements. As you're processing the loan, there's increasingly amounts of algorithmic decisions automatically being made on whether to approve or reject loans. and regulators need you to explain those algorithms. So again, there's a lot of data hygiene you need to practice to explain the behavioral algorithms, and then there's all of the settlement and processing parts after an approval of a loan or a mortgage. So there's lots of opportunities to introduce blockchain efficiencies there and either get better margins on your loans or reinvest that into better customer acquisition or retention.
Or prevent losses. I mean, think of if you use that immutability and that, irrevocability and visibility, what if you had no exceptions or returns? What if you didn't have to have an entire department that handled, invoices that were paid 3 times because they didn't figure it out in time. So it's not all just about the money movement. It's about what it can bring in a value chain that might just save a lot of money, not necessarily make a lot of money, but that's a margin, right? Either way, you want the margin. So it's really understanding how it can be used in that manner. And there's just a lot of use cases where if it's looked at correctly, it can do that. And I think the immutability, the traceability, the audit, the lack of, I think that's all not understood enough, right? So.
And there is not enough standards, right? And it requires a consortium to actually work with, right? So, but exactly, those are some of the aspects that we are looking at is how do we actually better make settlement, right? So we don't have the same level of returns, right? 1% change in that would actually be a significant aspect for the business, right? So.
Well, my comment would be, look at the rise of closed loop systems, right, for payment. That's another way. Just keep the money in the system. So you're basically, yes, a small fee, but you're still keeping the money. The other one is the rise of the concept of correspondence banking, right? An overlay of sort of the closed loop system, but extending that globally. So you're actually moving messages and you're not really moving money. I mean, you're transferring in sort of amongst yourself, but you end up not moving really any money around, right? Okay, thanks to the panelists. Thanks, everyone.
Thank you, Eric.